Polycab 20% over the last 1 week. Some brokerage reports are bullish even from now on. What do you think?
So two aspects. One, I think in terms of the results itself, a very good set of numbers, and the commentary itself was very, very supportive. So if you look at the overall market size construct for cables and wires, Polycab is expecting to garner even further market share gains. So they're at 25% of the overall market at this point of time. In terms of market capitalization, I think just 8 or 9 thousand crores behind the largest player, which is Havells at this juncture. And if you look at the players within the space itself, cables and wires market, with the real estate development that is happening across the country, expectations in terms of this speeding up even more across tier one, tier two cities, the demand for organized cable and wire makers would increase quite substantially. I think that is what they've thought we put forth in the management comments. Volume growth is going to be in excess of 50 odd percent over the next few years, and value growth should be quite substantial as well. From a valuation perspective, still trades at 47 times, but the move has been substantial. You just mentioned, Shell, sir, about the irrationality that some stocks witness. Polygon is probably one of them when it comes to it.
Yeah. I would imagine if you have the stock, don't exit. But this is not the price to come in. It's just way too overstretched. Wait for the market to correct and then get into Polycab, if at all. Mayuresh, let's just deepen the discussion. One very quick view on where do you think we are in terms of sentiment on the market, and then your two stock picks.
I think sentiments are very, very buoyant. In fact, I was just reading a report in Financial Times a couple of days ago where the Chinese real estate property market is in shambles at this juncture, and they're actually comparing that to the Japanese scenario in the 1980s, except that a couple of sectors like capital goods and some hard equipment sector is holding out for China. So I think they really need to come out of this, and unless that bump up probably happens, FPI flows would continue into India, which probably means that this exuberance and momentum might very well continue. Obviously, you have to be a little bit more sector specific and stock specific at this juncture. When it comes to our two stocks picks at this point of time, within the auto ancillary pack, Rolex Rings is something that we are liking at MarketSmith India. The EPS RS rating is extremely good from what we gather, not just for the auto ancillary pack, but in terms of the broader market as well. Bearing ring component, significant component of their top line. Net debt to equity is very, very negligible, 0.06 times. Expecting margins to hold up for two reasons. They've signed up a huge contract with a North American customer for EVs and a huge OEM contract in the Indian context as well. So margins normalizing and be staying around that 23-24% mark. Top line growth anywhere between 15 to 20 odd percent. And with less leverage on their books, the bottom line growth can be in excess of 25%, which we like at MarketSmith India. Anything about 20-25% in terms of earnings growth can really do well. So our own expectation is a 15 to 18% upside with a stop loss placed at 2080. The next trade would be Tube Investments. This stock obviously is a mix of both auto ancillaries and a mix of capital goods as well. For the mobility business, they are rolling out quite a few elements, the two-wheeler, the EHCV and the e-tractor business as well. I think a lot of stuff is going to happen on that one with backward integrated operation on the cell management business, integrating their margin performance as well. Engineering goods expected to do well, and within the capital goods, Crompton Greaves Power and Shanti Gears with their own are doing phenomenally well. So I think we expect a similar 15-18% upside with a stop placed at 6% below the current market.
If you like the video, do like, comment, share and subscribe.